Hi, my name is Alex, and I'm the Customer Success Director for Aplos. Today, we're going to take a short look at how to assess your mid-year financial health, make any sort of budget or forecast revisions, and then what are some best practices to do that in Aplos. A budget is typically a document that you create with your staff and then to get board approval for, which outlines what you expect to make for the current fiscal year for your income and expenses. So it's saying, let's just say January through December is your fiscal and calendar year. What you're going to do is say, here's all my income accounts, here's all my expense accounts. I'm going to say that I expect to make this much in my income and spend this much worth of expense. At the end of the year, that will then give you a projected net income for the year, which then throughout the year you can compare to and say, are we doing how we expected? If we said we were going to make and spend this much, are we actually spending and making that much? And if not, what do we do about it? Or if so, great, how can we make that better? And a forecast is a little bit different than a budget. So a forecast is a projection. It's something that you're looking at and saying, I expect this to happen, so let's plan for that. What that typically involves is, among other things, a budget. So you take data, you take seasonality trends, you take your budget, you take prior year financial documents, and you wrap all those up and you say, based on trends, anything we can find, what our budget is, how we expect the year to go, this is now what I plan or project or forecast to make and spend compared to my actuals and my budget. For example, once you get to February, you typically know more than you did at the beginning of January. 1 month or more has gone by, and so now you have more data at your disposal to make more informed decisions for the remainder of the year. But budgets and forecasts are typically wrong. You are typically working on them for a couple of months before the year actually begins, and then as the year happens, stuff changes. Your donors don't come through, a grant didn't come through, you had some unexpected expenses, something. An event didn't work out the way that you wanted to or worked better than you wanted it to. Maybe you have a surplus in your budget or forecast. All of this data can then be used and evaluated throughout the year to either revise the forecast or the budget, kind of depending on what your organization allows for. But either one can be done mid-year. So for today, what we're going to look at is revising this based on your financial health that you assess throughout the year. Now, I'm going to use terms like budget and forecast almost interchangeably because it kind of just depends on your organization. But depending on your board, your staff, your situation, you might update the budget, you might update a forecast, whatever you want to call it. Either way, it involves taking a look at financial documents throughout the year, assessing financial health, and then making tweaks or changes to then better be situated for the remainder of the year. Okay, so let's talk about assessing financial health throughout the year. Let's make some assumptions. One is that you actually have a budget for the fiscal year, so there's something to refer back to. The other assumption is you're working on kind of a mid-year financial point. So let's just say June 30th for the sake of example. Now this can be done per month, this can even be done per quarter, but just for the sake of example, let's say we're halfway through the calendar year and now we're taking a look at where we are and what we want to do going forward. So what you would do is run your budget, run an income statement, run a balance sheet, run all the financial data that you want, and then begin to assess and look through it. Specifically for the budget, you're looking at your actuals versus your budget. So you're looking at what did we actually do compared with what we planned. Are we over? Are we under? Are we over or under in areas that we thought we would be? Or are there kind of unexpected things that have happened? Now there's also two kind of ways you could have developed your budget. One is you would have set a value, and then that value is divided evenly over 12 months. So for instance, if you said, I want to budget for $12,000 worth of income, and just divide that evenly by 12, now you have a projected budget of $1,000 per month. But if you're like any nonprofit, typically, you have kind of a seasonality to what you do. You run projects or fundraisers or campaigns or things that just kind of spike throughout the year. There's seasonality to your budget data. And so what you might have also done is written your budget to factor those things in. So instead of just saying $12,000 divided by 12, you would have said $12,000, but we expect 3 of it to come in January because it's kind of a big month, and then it's going to dip in February through June, and then it picks back up in July. So there's some sort of, again, seasonality or some sort of dynamic change to the budget data that you might have planned for. So either way, what you're doing is you're taking a look at that budget, either numbers divided by 12 or developed over time. So what you're going to do is take a look at those numbers. If there's anything that's over or under, you're going to want to give it some time. So if your expenses are under, that's typically a good thing because you've spent less than you projected. But again, why is that? Did something not happen? Did something happen that you didn't expect? Is income over or under? Did you make more money than you expected to? Or did a donor drop off, or did a grant not go through? And now you have less than what you would have projected or budgeted for by this point during the year. Either way, again, whenever you're evaluating this data, you're taking a look at what's happening and where things need to then be adjusted. So once you've assessed the financial health, let's say that some revisions are needed. And this would happen for three primary reasons. One is you are off base. So your plan, your budget, your forecast through the date that you're looking at is off for whatever reason. Your expenses are over, your income is under, something is not necessarily the way that you would have planned to a negative degree. And so now you need to kind of reevaluate in order to not continue that same kind of trend or to better plan for the rest of the year. So let's say a church had a $5,000 budget for office equipment this year. In June, midway through their fiscal year, they had spent all $5,000 of that budget. If they were working from a budget that evenly divided the $5,000 over 12 months, this would show that they're $2,500 over their budget for the year to date. However, maybe this was due to a foreseen hire of a new employee who needed a computer, desk, and other equipment. If they knew they were making this hire in March, they may have budgeted specifically for that $5,000 to be in March, so then they would show that the budget is fulfilled for what they planned. Let's say the hire was not planned, and the person they hired in March took all of the budget for the year. However, after hiring that person, they knew they needed to make another hire in September, which would mean the same office equipment amount. This church would now need to look through the rest of their budget to see where they can unlock or reallocate the $5,000 needed to make the hire in September. This is where they would look at income to see if they are over what they projected, because if so, they may decide to allocate some of that surplus to cover the new employee. Otherwise, they would need to cut from another expense line budget or get board approval to make the hire and intentionally go over budget for this year in that category, which happens. Or you could be on base. Your income could be over, your expenses could be under, or a combination of the both. Now you have more money in your bank or more, surplus to do what you would like to do with it. There might be other things that you would like to now accomplish with that extra money. The flip side to the hiring example from earlier, let's say the church had made the hire in March, but the employee had a desk and computer they preferred and thus didn't need one to be purchased for them. The plan is still in place. The employee was hired, but now there's $5,000 budgeted to an expense item that they won't ever use. So do they decide to use the $5,000 on other equipment instead? Or does the church decide to reallocate that budget to another area that might need some more funding? Maybe there's an event coming up that they could use the extra $5,000 for, thus upping the experience for the donors and potentially generating more revenue. Or you could be just right where you expected. Nothing's really off, nothing's really on. It's kind of working exactly how you planned, but something has come up, priorities have changed, and now some reorganization is needed. So let's say the church had received a grant they applied for, but didn't factor into the original budget because they didn't think it would happen this fiscal year. We'll run with the best case scenario and say that this grant allotment infused enough money into the organization to cover its expenses. In order to steward this money responsibly, they will want to factor the amounts into their budget for the current fiscal year so they can properly show that they kept in line with the grant guidelines. This is where Aplos comes in handy. The grant would likely be set up as its own unique fund, and thus creating a separate running balance and set of financial reports for the grant. With Aplos' advanced features, they can budget by fund so that the amounts they're budgeting for the grant don't commingle with the original operational budget. Now, there's a few ways you can accommodate this. But let's say the church is not creating new categories for the grant, just a new fund, meaning they wouldn't have an expense account for office equipment and another expense account for a grant office equipment. They would simply go into the budgeting screen in Aplos, filter by the newly created grant fund, and assign the amounts per income and expense line for this grant. Then in the reports, they can run a budget by fund to show how they're doing compared to their originally created operational budget for the general fund, and then a separate report to show how they're doing compared to the grant fund specifically for that same fiscal year. So let's talk about some tools that could help in this process. Now, budgeting is a very kind of unique thing to where it typically is not done in one software. Aplos has some great reports. So if you are an advanced customer of ours, we have some budgeting by tag and by fund, which would allow you to budget in very granular detail without having to significantly increase your chart of accounts. So what that means is instead of categorically accounting for things in income and expense accounts and then budgeting accordingly, you can typically reduce that list of accounts, but gain the same level of detail by using funds and tags. And then let's say if I had a specific project or an event or a fundraiser or a department or a location or a team or a fund, one of these things that I want to set a very specific budget for, I can do that. And then this budgeting process can now happen not on just an org-wide basis, but per group, per team, per department, per location, per venue, per project, per fund, whatever you want. So that type of reporting is super beneficial, and we offer that in Aplos. So if that's a tool that you have at your disposal, great. Otherwise, run what financial reports you can, and then also incorporate extra things. So typically most organizations work with some sort of spreadsheet software, whether that be Numbers or Excel or Google Sheets. Any of them are great tools. Because again, budgeting is kind of a unique beast to where you can't just look at one document and decide, yep, that's what our budget needs to be. You typically need to run some formulas and some evaluations and compare things, especially if you're going back multiple years. An example of how Excel can help the budgeting process. Let's say your church doesn't want to spend more than 40% of their expenses in administrative costs, including salaries and overhead. Imagine your chart of accounts is listed vertically in column A, column B is your actuals from this year, and column C is your working budget for the coming fiscal year. You can use a sum formula to total the budgeted expenses across the organization, and let's say this came to $50,000. With the 40% in mind, that means that no more than $20,000 should be budgeted for the administrative expenses group. You would then add another sum formula to total the administrative expense budget cells, giving you a subtotal for that type of expense. The admin subtotal divided by the overall total will give you a percentage. As you enter budget amounts, you can watch how that percentage changes and know when you've gone over 40% or if you have some more room to go. So, again, run all the information you can, get that into Excel if you can, or some other similar program, and start running numbers. Run everything that you can, do some comparison, and that will definitely help you make the most informed decision for your budget revisions or your budget creation process for the next year. And lastly, just some best practices, 2 things that we've seen with working with our customers that really help in this process. The first is be a hoarder with information. So again, gather all the information you can, run every financial report that you think matters, and for whatever period that you want to compare, run extra data, run grant requirement type reports, or if there's any sort of donor restricted funds, like gather all of that information, because what you're doing, whether you're setting a budget for the next year or doing some sort of revision, is you're trying to assess your current financial position, try to predict what's going to happen in the next 12 months or ish, and then set some numbers in place that then your board will keep you accountable for to see how you're doing compared with your budget. So the more information, the better, because that will help you make more informed decisions. The other best practice is to involve those who are involved. So if your staff is varied, so if you have multiple teams, team leaders, departments, ministries, you typically want to involve the people that actually have some say or impact in what is actually going to happen. Now, you might have a budgeting process that says my administrative team kind of has the end say, or we're going to come up with the plan, but if you're budgeting for a department that you're not actively engaged in, then you might not have a good sense on, what expenses are relevant, what's an actual good budget, what do they project for a certain event. Without kind of involving those people or asking questions, it might be hard to predict that data. So a best practice, again, is to involve those who are involved. So to recap, what we looked at today was assessing financial health, taking documents, looking at where you are mid-year, how did it go according to plan, what revisions do you need to make, and then how do you make those revisions, who to involve, what information to gather, and then how to do that using Aplos, advanced reporting, or in Excel or some sort of other similar program. So hopefully this was helpful. If you have any questions, let us know. You can contact us at support@aplos.com or dial 1-888-274-1316, and we'd be happy to help. Thanks, and have a good day.